If inflation's still out of control, then they're going to have to continue to raise rates. Well, having tangible assets and having your money parked in tangible assets, it's pretty good. Yeah. That's a good hedge against inflation. Has always been historically. And so I don't mind buying right now. What's up, guys? Welcome to another episode of the Vacation Rental Revolution podcast. I'm your host, Shawn, and you can see we've got a little different setup today. This is our first episode of our new series called Whisky Wednesdays. This is going to be kind of short, sweet, to the point episodes where we're going to talk about some trending topics. We're going to answer some Q&A questions. We're going to talk about some current projects that we're working on over here at Odyssey. And I'm always going to be joined with my main man, Dave Sivulich, and he runs all of our operations over here at Odyssey. And so these are just going to be some conversations of what's going on in our world, in your world, and answering some questions. And so we're going to have a little bit of fun. I've got my whiskey out. Dave's got his Coke Zero out. And so we'll dive right in. And so we're going to start always with trending topics. And so one of the hot topics right now, Dave, is interest rates. They are absolutely through the roof. It feels like we've had rates go up almost, what I saw is they're the highest they've been in over 20 years. We're both in acquisition mode right now, and we're feeling the pinch of that, right? And so that's something that's going on a lot in a lot of people's worlds. And so when it comes to rates, it affects a lot of different things. A lot of times we think it's just cash flow, but there's a lot of effects that it has on inventory. We're seeing really, really low inventory right now. And it's a really frustrating part of the process. You and I, we just missed out on a 1031 exchange because we just weren't finding anything in the markets we were looking, right?
It's on everybody's mind what the interest rate is. And obviously everybody wants to have the lowest interest rate they can. However, I think it really comes down to dialing in the numbers and making sure you understand the market, you understand the potential, and then you can make a good decision whether it goes along with your goals and how much cash you have, and if you want to dive into specific properties.
And that's what I say too, when you're buying an investment property, particularly, I'm buying an investment property right now, I'm buying a primary home right now, so I'm like feeling the pinch all over the place right now with interest rates. But when you're underwriting investment properties, it's an expense, right? The interest you're paying is an expense, a line item when you're underwriting the deal. Does it make it tougher to cash flow on properties? Absolutely. Is it affecting what's going on in actually being able to have a profitable property? For sure. But what I feel like is the bigger deal with interest rates right now, and I don't know how we're going to solve the problem, because there's a lot of inventory that would normally hit the market that's not coming back on the market right now because nobody wants to get rid of the houses that they have at 3% interest rates.
Yeah, nobody's going to sell their house where they're paying a low interest rate, and then they know they got to buy and get into a bigger interest rate. So let me ask you this. So someone comes to you and says, hey, I'm not sure if it's the right time. I'm a little concerned about the interest rates. They're kind of high. Should I buy a short-term rental or should I wait? What's your advice? What do you tell them?
Yeah, I think that there's a couple things that are likely to happen in the market right now with interest rates. One, the Fed thinks that we still have inflation and we're trying to curb off inflation. I mean, they just made an announcement that they're now not predicting a recession, whatever the hell that means, right? I mean, it seems like every time we turn around, something else is going on. So if that's the case, maybe they start leveling off rates or bring them down a little bit. If they don't, if inflation's still out of control, then they're going to have to continue to raise rates. Well, having tangible assets and having your money parked in tangible assets, it's pretty good. Yeah. That's a good hedge against inflation. Long-term, has always been historically. And so I don't mind buying right now, right? I'm very, very aggressive right now for two reasons. One, if that happens, I want to be buying and have my money in tangible assets that help me hedge against inflation. The second scenario, which I think is likely to happen, and a lot of people are talking about happening, is that rates actually come down. And when rates come down, there is a lot of shadow demand out there. And there's a lot of people that are sitting on the sideline that normally would be selling and moving. You got a lot of move-up buyers that are not doing anything. There's this huge bottleneck of inventory. Inventory levels are super low. That's why you haven't seen house prices come down, right? Because even though there's been this huge downward pressure on demand with interest rate hikes, there's still more demand than there is supply. And so that gap between supply and demand is still so wide, and because nobody's putting their houses on the market to sell. When rates start to flutter down and fluctuate down, all of a sudden you're going to have all these buyers come out of the woodwork and try to buy again. And so now, in my opinion, all hell is going to break loose. You're going to have absolute mayhem again almost like we had during that COVID era when like you were bidding against 40, 50 people.
Yeah, cash offers.
Yeah, right now we just got back from Georgia and we can talk about that a little bit, but we're buying some other properties right now. It's nice because I'm not competing against 50 people like I was 2 years ago.
Right.
And when that's happening, all of a sudden prices skyrocket again, which I think is a problem. Yeah. Prices are at all-time highs and I don't see them coming down. So the question is, do I wait or do I dive in, right? One, it has to underwrite. It's harder to underwrite.
Right. The numbers got to make sense.
There's fewer properties to choose from. Numbers have to make sense, but at least you're able to get into the game before rates. If rates do come down, I'm convinced prices are going to skyrocket.
Well, and I think also if rates go down, refinance. You know what I mean? That's an option for people. And I think they don't necessarily think of that all the time. In the past, the last couple of years, people have been buying at a very high price. They've been paying, cash offers. They've been paying above listing, and they've been paying $10,000 to $15,000 more than the asking price. Well,
or more than that.
Yeah, exactly. Right? So now, spend that $10,000 to $15,000 on refinancing, and you're in a good situation or a good position at that point.
You marry the property, you date the rate, right? So it's you can refinance. Now, what I don't like and what I don't think is a great strategy, you still have to make sure that the property underwrites at today's interest rates.
Yes,
right.
Yes,
I think it's risky to buy investment properties when your plan is I have to refinance and I have to get this at a lower rate to make it work, and I'm hoping that it's in 6 months from now.
That's like a bonus. Absolutely. Make sure the numbers work. And if you can refinance and you have the cash, that's, kind of an option down the road. You and I talked about it just in the last couple of weeks. It was interesting. When we bought our first homes 15, 20 years ago, we bought it at like a 10 and 11%. Yeah. We were pretty happy because before that they were 12 and 13. And so it's interesting. You look at that and you think, hell, 7% isn't too bad, but it seems like it's bad because the last few years it's been down in the 3s and 4s. So
it is relative. And when you have high prices coupled with high interest rates, those two things really make the cost of ownership skyrockets. Right. And so, the good news is in the game that we play, in short-term rentals, it allows us to go into a lot of these nicer markets, nicer homes, because our income potential is a bit higher than what you would find on long-term rentals and some other assets. And so it allows us to still cash flow at the rates and the prices that we have right now. We see it across the board, right? We're seeing it all the time. We'll really watch that close. I think it has a big effect on a lot of different things in the real estate market. I just feel like that supply-demand gap is getting so wide, and you can't build yourself out of this problem, right? And it feels like that's the only inventory we start to see. There's so few homes that are hitting the market of trade up buyers or existing homes hitting the market versus just new construction coming out. And a normal market in the U.S. is somewhere around 3.5 to 4 million homes on the market. Right now, we're under 1 million homes, or right at that million home mark. So the market is way underserved right now. And there's a lot of buyers out there. You got a huge buying group. You got the millennials, which is like a buying group, almost like, you remember how the baby boomers went through different markets and segments, and how, entire economies were built with the baby boomers. Millennials are that same size of a buying group. And a lot of them are like, hey, we want to buy houses and we're priced out of the market. We're waiting. I promise you, when rates come down,
it's going to bust. Yeah.
They're like, okay, the gates are open. Now I can go do this. Yeah. It'll be interesting to watch. So what's going on? What's going on in our world right now? What do we got going on? We've got
you and I are in acquisition mode.
Yeah.
We're actually looking for a property. We sold a property in Florida, and we have a little money that we made off that. So we're in acquisition mode. We've been looking at properties in several different markets. So that's been fun. But I think the advice that we would give to people that are listening is, be patient, find the right property, do the numbers, make sure that the data looks correct, look at various locations. Some locations may not work. Some location, in every location, there's a great property. In every location, there's a bad property. Yep. So it's about finding that. And sometimes it can be a little daunting, but patience is a virtue, and kind of make sure it's the right one, make sure the numbers work out.
Patience cost us a little bit of money recently in taxes.
Yeah. We were in a 1031 and we couldn't quite find the right property. So we had to pay Uncle Sam a little bit more than we were hoping, but that's okay. We did well on the sale of that property. property. So
yeah, we do well. And, and I keep, I know that the one that we're looking at partnering on is, you're convinced we need to be patient enough to find one out west here in the, in the mountains out west.
And my patience levels dropping.
I keep trying to say, hey, come out east with me once in a while. I love the mountains out west, but man, it's
well, we get that question all the time. It's a good little segue, but we get the question all the time of what location to buy in, where should I look? And I think that comes down to a lot of what your goals are. Is it strictly passive income? Is it lifestyle asset? Do you want to use it as a vacation home? Or, what does that look like for you? And that depends on what location you're going to look at.
I'm going to peel back, on a little tangent from just what you said, because this comes up all the time too. People ask us, you're buying these properties for the long term, you underwrite them for the long term. The property that we just sold actually wasn't. We planned on keeping that for a year or two. Right. We knew we were buying in a really profitable area, and it was we planned on some appreciation there, which we got. It was a new build. We walked into equity, but that was like a stepping stone property, right? And to your point, it was a stepping stone to a lifestyle asset into a market that we knew didn't cash flow really well because acquisition prices were so high out here out west where we live in the mountains in Utah, and we're looking for a mountain property, in Idaho, Wyoming, Montana, Utah, the Intermountain West. We planned that out, right? We said, hey, listen, we're going to go buy this property in Florida. It was a new build. We knew we were walking into equity, but the plan was to take that chunk of money and put it into the property that we really wanted as a lifestyle asset. Right. And so then all of a sudden by putting more down, we make it to where we can break even and make a little bit of money on this asset, right? Yeah. And so strategically, there's a lot of moves. People always do say, hey, I'm going to chase the best market. There are good properties and bad properties in every single market. But what's really critical is to really understand what you want out of the market you invest in. Is this a property you're going to use? Is this strictly an investment? Is this going to be a step-up type of a property to where it's kind of a means to an end, right? We buy properties all the time that are a means to an end, or something that's going to supplement a really great lifestyle asset. And so you have to really think of what those property goals are, because that's going to be your guiding light, the North Star of how you're going to make the decisions, because we're building portfolios. I just went out with the family out to Blue Ridge, Georgia. We have a nice property out there. We're going to buy another one out there. You're not buying a property out there, right? You don't have much interest out there. But for us, even though we're following that same blueprint and process plan, our portfolios can look totally different. And that's okay. Everybody wants to know, where are you investing? And what are the best markets? Well, the best markets for me might not be the best markets for you. And it's really critical to understand that,
what that looks
rather than just chasing markets. And some of the most popular blog posts in our world, some of the most popular reports that are out there are the 10 best markets to invest in, the 100 best short-term rental markets across the U.S. And I would say, based on what? Based on what criteria? Somebody else's criteria or your criteria?
Totally different.
Totally different. And so I think that's really important to consider, because everybody's criteria is so different based on your goals, the money you have available, all those different things.
So you talked about your trip to Georgia. You just got back, took the family out. You also you had a little meetup with some of the members, some of the Odyssey members. How was that?
That was awesome.
That was fun. What did you have, about 15 to 20?
Yeah, we had 20 of our members in Blue Ridge, Georgia, of all places, right? Some of them drove up from Atlanta.
A couple hours, right?
Even a couple from Atlanta.
So that's cool.
It was awesome. Yeah, and so we're going to start doing that. So anybody that's out there, kind of listening and stuff, we're posting meetups, and we're going to be out on the road a lot right now, because we're in heavy acquisition mode, looking at a lot of different markets, and that was really fun. It was fun to see a lot of our members, hear what they're doing building wise, and then these properties that we're investing in right now. Kind of the story. Those of you that are listening, we're taking our kids out, and I've got 12-year-old twins, and about a year ago we decided we were going to help them and partner with them on a property. And so this is a property for them to start building their portfolio.
Yeah, that's fun.
And part of the deal was that they had to come up with half of the down payment. Originally we said 10%, and then I said, okay, you don't have enough skin in the game, so that's going to make you put up half.
A little bit more pressure.
But it can't come from us. And so it took them about a year and a half to get enough money to be able to put down payment on their max property price is about $500,000. So they both have together about $25,000 that they saved up, and then we're going to partner with them. And so it was really fun. And we'll post some of these on if you're listening to our social platforms and things like that. We're going to post kind of the journey of them walking through properties, what they like, what they don't like,
evaluating take a look.
They went in and they dove into they dove into the underwriting process, and so they bring me their spreadsheets and we look at it and make sure. But we really, Teresa and I really wanted this to be a process that they went through, not properties that we picked out. We're kind of looking over their shoulder, making sure the T's are crossed, the I's are dotted, obviously, right? This is what we do. This is their portfolio starting to build. And so it's really fun listening to them talk about how they're going to design it, what experience they're going to create.
Well, they live it day to day with you coming home and talking about your adventures and your things that you've done all day long. And so they learn just from discussions at the family table, and you guys are like, hey, let's get you guys involved. Let's get your own. And by the way, I think it's great, one, because it's a family, you share this experience together, but also you always hear about starting your portfolio when you're young. Yeah. And imagine if you owned properties 20 years ago or 15 years ago or 5 years ago. So I think that's a great option for them to be able to start and start building their portfolio. I mean, obviously you're helping them, but this is great.
The conversation started about a year and a half ago as Wyatt wanted to buy the Mercedes camper van, right? And he's like, hey, this would be really fun, and this and that and the other. He made this big sales presentation. I told you about this, right? Remember? He did. He said, sit down on the couch, Dad, and I'm like, dang, I wish I would have recorded it, because one hell of a sales presentation. I should have sent it into Mercedes, and he could have sold vans for him. But all the pros of having a van and what it would mean to memories and all this and that and the other. I said, okay, good presentation. How is this thing going to get paid for, right? And I said, and so he said, well, you guys could buy it, right? Like,
exactly.
Okay, these vans are a couple $100,000, right? I'm like, no, okay, so that's a good concept to think, okay, and so we started having these conversations. Okay, if you had the money, what would you really buy? Right. And would you buy a van, or would you buy a home? We started having this conversation with him a little while ago, and then Father's Day this year, I felt bad for my father-in-law. He's buying a Toyota 4Runner, a new 4Runner, upgrading his vehicle, and I got my kids have him pinned in the corner, giving him a lesson on appreciating assets versus depreciating assets.
Yeah, so what he's buying is not really going to put money in his pocket. They were like, I felt like kind of apologized afterwards. I'm like, okay, sorry, awesome. You're actually allowed to buy depreciating assets. Oh, that's funny.
Should we wrap it up? Start rolling into the Q&A and questions. I know you've got a couple.
We got some questions from some folks, and obviously we want to answer some questions. And so this one was from Jennifer. Any advice for investing in a seasonal market? We live in New Jersey and are considering properties at the Jersey Shore. What advice?
So Jennifer, what I would say to that is some of my most profitable properties came from seasonal markets. We always say that a lot of people assume you have to have a market that is year-round accessible, and that's not the case, because typically the more seasonal a market is, which means in a market that might be, you have one specific peak season and then it falls off after that. So the more seasonal a market is, the higher the nightly rate is during the peak season. Right. So relative to the price you paid for the property. In a less seasonal market, the lower that price is average across the board. Right. And so, I'll give you an example of property we had up by Yellowstone National Park. I've used that example a few times but that was really seasonal. It was actually only open from Memorial Day to Labor Day.
Right. The snow, the roads were closed. They just didn't.
It's a lake property in the mountains at 8,000 square feet. So, the snow's barely melting by Memorial Day, and it starts falling by Labor Day. However, during that 90 to 100 day period in the summertime, we got a really high nightly rate. Yeah. We had other properties like in Florida, Orlando area, in some of those markets that are not as seasonal, pretty close to the same acquisition price. And that average nightly rate throughout the year, even though we had a much higher occupancy throughout the year, that nightly rate was about a third of what we got during that peak season on the Yellowstone property. Yeah. So both of the properties generated close to the same income, but the one property only had wear and tear for 90 days. Yeah. My other property had wear and tear for 300 days.
And I think that's good. But I think people forget about that. They don't consider that some of those seasonal properties, they have a lot less wear and tear, and things last longer, things are better taken care of, and so forth. So that's a big deal when people decide to buy. And it allowed
us to use it more. We loved using that property in the wintertime and the fall, and we didn't even open it for rentals. And so I like seasonal properties because, one, I can use them more as a lifestyle asset without affecting my rental income, and then also much less wear and tear on a property. So absolutely don't discount seasonal properties because relatively speaking, a lot of times your gross revenue for the year can be very similar to those seasonal markets because your nightly rate is so much higher during the peak season.
Yeah. Good. Well, thanks. Yeah, I think that's great. So the second one here is from Garrett. I'm hearing that more of the larger cities are trying to limit the number of homes that can be used as Airbnbs. Does this pose a problem for Airbnbs in the future? So this kind of gets into the zoning and the those type of things. So
the one who was that? Garrett.
Yeah.
So Garrett, on that one, it's absolutely will affect, especially in major metropolitan areas, and that's what we're seeing. The last year and a half has been kind of a year of sweeping regulations for the short-term rental industry at large. And because now short-term rentals are considered a mainstream asset,
right.
Just like, long-term rentals, commercial rentals, multifamily properties, everything has its own specific zoning and licensing requirements, and short-term rentals now do as well.
The same, yeah.
And so most municipalities are addressing the issue. When it comes to short-term rentals in the major urban and major metropolitan areas, there's a housing shortage, and there's a shortage of affordable housing. And so these municipalities are really worried about all of the rentals now saying, well, I can make more as a short-term rental, and so I'm going to turn it into a short-term rental, and that exacerbates the problem with the housing shortage and affordable housing. They don't want all the rentals coming off the market for long-term tenants in those areas, and so you are going to, I believe, in the future and now and in the future have an issue in a lot of the major urban areas and major metropolitan areas. When it comes to the destination markets, they are still putting rules and regulations in place, but they're not going and saying, okay, we're not going to allow this, because they rely on people coming in and visitors and everything else. It's great for the local economies. And so, I do think you have to pay attention when you start to invest in this asset class, where's going to be likely that you can do it and where's not going to be likely, and that's where you're starting to see really like the rise in midterm rentals in a lot of those urban markets, those 30 to 90 day rentals for corporate travelers. It became really popular for medical professionals, traveling nurses, but now it's become midterm rentals are something that a lot of the short-term rental investors are looking at in the major metropolitan areas. And so, it's something to definitely watch. We never buy in areas that don't have the, a short-term rental. Yes, you can do this, and we can get the blessing to get licensing and permits for that reason. If we're buying these properties for the long term, we don't want to run the risk of having those things change on us. And a lot of your areas, and guys, I promise you, don't look at Airbnb to decide if you can operate a short-term rental. There's a lot of areas you can't operate short-term rentals, and you'll see a lot of them on Airbnb still.
And VRBO
and they could get shut down tomorrow. They could last months or years, but they're not allowed to do it. We don't invest in those areas.
Well, we talked about this yesterday, and it was a little frustrating for us, but we had one of our members contact us and say they were down, at hour 11 on their property. They had already made an offer. They'd already done all the due diligence. They'd already gone down this path, and then to come find out it wasn't zoned for short-term rentals. And we gave them advice. Listen, the first thing you do, step one, is understanding the market. Make sure that it's zoned correctly and that the regulations allow you to run a short-term rental in that area. And use your real estate agent, go to the current HOA if they have one, the city, the county, but that really is the first thing. Anytime we look at acquiring a property, first question we ask is it zoned for short-term rentals? And can we run this? It's an asset. So we're buying an asset. If that asset can't make us money because they won't allow that, that's a big deal.
Absolutely. And it's the first step of the process, right? It's before you even get into underwriting the numbers on any deal. And so that, to your point, to hear somebody that says, man, I found the perfect property. I spent a ton of time figuring out the numbers in the market and on this property. And then I get to the 11th hour before closing and I find out I can't do a short-term rental.
Right.
He's upset about he's upset about the municipality. Yeah. It's like, dude, be upset with yourself. Look in the mirror and say, hey, listen, I waited to the 11th hour to do step number one.
Yeah.
And absolutely, that's the first step in any sort of acquisition. If you're going to be buying these properties, is can I actually operate this asset the way that I plan on with a short-term rental?
Yeah. Last question, and we get this quite a bit. This is from Steve, and he says, I own a successful business full-time with a wife and kids. How can I balance everything without neglecting all my responsibilities as a business owner, husband, and father? So busy guy, runs a business, and now he's like, how do I juggle these things?
Yeah, I think it comes down to priorities, right? And that's what I would say, Steve. I promise you, everybody's busy. There's nobody that's listening,
Right.
nobody that's ever sitting there thinking, man, I've got all this extra time. Maybe somebody that just recently retired and they're like, I don't know what to do. But most of us are super busy. So you have to make priorities, right? It's
Right.
a matter of saying, I love the saying, if you want something done, give it to a busy person, right? Typically, the busier you are, the better you are at actually navigating and adding more things to your plate. And so I think you have to look in the mirror and say, okay, what's a priority? Now, that doesn't mean that everything is always balanced, right? And that's where, I'd love everything to be balanced. I'd love, a perfect balance between my business, my family, my fitness, my faith, all those different things that are important to us. I wish there was a perfect balance across the board.
Right.
The reality is, for me, it's not, right?
Yeah.
Depending on things I'm working on, I'm going to be heavily weighted on something.
Right.
And Steve, if you're diving into a new game and saying, okay, this is important for me to build this portfolio, the real life answer is, it's not going to be real balanced in the beginning. It's going to be front loaded on time and money and effort, because you got to figure out the game. You got to learn the process. You got to figure out how to bridge the gap of where you're at, where you want to go. And sometimes other things are going to frankly suffer from that, right? And we don't want them to, but the reality is they do. And the key, in my opinion, is to make sure that you recognize those areas of your life that are getting affected and that are suffering, and you say, okay, I got to fix that too. That now is a priority as well.
Yeah. Understanding those are challenging times, and understanding that, hey, maybe this part is lacking, but maybe it's for a short period of time while I'm doing something else that's maybe more a priority. And then I know I got to get back to whether that's kids, family, travel, whatever that is. So I think that's good.
You have to dedicate a certain amount of time to every one of those things that you feel like is a priority, right? I'm not here to tell you my priorities or your priorities, right? We're going to all do things different. But when you're really trying to build something, you can't take your foot off the gas, and it's like you get good at spinning a whole bunch of plates in the air at the same time. And you have to figure it out. Like, what do you think about that? I mean, you're the same. I mean, you're super involved with the kids stuff. You've got busy lives at home and building portfolios, running this company with me. I mean,
I think nobody's immune to a work-life balance, and nobody's immune to the challenges of trying to, one, financially take care of your family, but also the priorities of really being able to dive in and support them with, my kids, they're super busy in sports and athletics. And so making sure I get to the games and supporting them and making sure that, we're supporting them at home with schoolwork and stuff like that. But at the same time, I think having conversations with them and maybe having a weekly schedule or a monthly schedule and saying, hey, these things are a priority, but you also know, what, we're having a webinar that's going to go till 8 or 9 o'clock tonight, and I won't be home tonight. So everybody, if we communicate and we plan accordingly, I think but also when the weekends come, we're going to spend family time, and we're going to do this on Saturday and Sunday, and maybe take a trip or do these things. So
there's never going to be perfect balance, right? Create some non-negotiables. I have non-negotiables in my life that I do every single day. One of those is my lunch. But it's you guys, that's kind of an inside joke. Shawn
is a creature of habit and has the same thing every single day for lunch. Maybe on another episode, we'll tell you where he goes and we'll tell you what he has.
Yeah, that'll be the cliffhanger.
But just so you know, it's a miracle to get Shawn to eat at a different place and a different food. But, that's creature habit, right? That's fine.
Well, I do the same thing. Like every morning I wake up, I have coffee with Teresa. Every lunch I have the same lunch. Every night we pray together as a family. If we're out of town, we literally have a phone call. You've heard me, like when we're on the road, you're like, it's crazy. We don't miss certain things ever. And so kind of going back to the point of how do you manage it all, you figure out what's important and you make it important, right? You make it a priority and you figure it out. And so we do get that question a lot, Steve, and it's something that we all wonder is how am I going to layer something else on? How am I going to do this? And it's what Teresa told me a long time ago. I used to be the guy that said, I'm too busy. I can't do anything else. I'm too busy. And she said, that's a bunch of bullshit. You're not too busy. It's not a priority. And ever since she literally looked at me and said that to me, I was like, okay, I'm not. And she told me, she said, I don't want you to ever tell me you're too busy for anything again. Be honest about it and say, right now it's not a priority.
By the way, I love that. And I've heard that a few times. And I've actually used that, but it's got me in trouble a few times. Because she,
it's not a priority.
Kelly
is like, what my priority is.
I mean, maybe I'm just not using it at the right time, but I'd say, no, listen, honey. It's not because you're too busy. It's because it's not a priority. Sometimes
you got in trouble?
It doesn't go over well.
Hey, Sorry. Hey, that came from my wife, and so I was like,
exactly.
I just was
if
like,
it
okay,
came from you,
deal.
Yeah, it might be different, but I do like that. That's important. But I'm glad, we have these questions. I think it's important. We'd love to keep answering these questions on every episode. And it just gives you some real life questions that people are asking and that people are concerned about, whether it's life or, their business or getting into the short-term rental, vacation opportunity. So
awesome, guys. Well, listen, we will wrap up for today. This has been a fun new episode, and we'll continue to keep coming at you with our Whisky Wednesday episodes every single week. If you got any value out of these shows, we always ask you to do a couple things for us. If you have more than 30 seconds, leave us a review and give us a thumbs up and give us the rating. And then also, if you got value and you think somebody else would get value, the same value, share it with them. Send it over to it, share the episodes with them. And then those of you that are starting to listen and you want some of your questions answered, if you're on any of the social platforms, you can post it in the comments. We'll make sure we monitor all those. We'll make sure that we get it on and answer your question on an upcoming episode. And then also, if you're listening on your favorite podcast and you're driving around and you don't have somewhere to comment on your podcast, then also you can send an email to us at support@odyssey.com and we'll get to it. So guys, appreciate you joining us. We know how valuable your time is and we appreciate you spending it with us. And you guys know I always leave you with one challenge at the end of every episode, and that is to go pick one thing you can do today to start building that life you don't want to take a vacation from. Cheers, my friends.